Need for a reconciliation statement.
What is this? The bank has sent me a statement. You have overdrawn again.
What do you mean, Father? Whenever you receive statements from your precious banker, you are in a bad mood.
What I'm trying to say is that there are no funds in your account again. You have withdrawn your entire allowance. In spite of having no funds, you have made additional purchases.
Father, my statement shows that there are ample funds in my account. Don't trust your banker blindly.
Oh my God! This is last month's statement. You have made so many purchases after that. Your bank balance is obviously going to change.
See, when the bank had all my funds at their disposal, did I call them consistently? So why should they bother me when I've exceeded my account balance limits?
I see. I shall have to explain some very basic concepts to you. Better still, I will call the banker. They would be in a better position to explain.
Sure, Father. As long as you do not cancel my allowance, I do not mind receiving free advice.
So, Trim, I hope you can explain my daughter finer nuances of banking. I'm unable to get my point across.
Banking is pretty interesting. It's almost like a jigsaw puzzle, you know. Let me explain. Every month, your father gives you an allowance, which you deposit in your bank account. Left side of the cash book is used to record the receipts, and the right side is used to record payments. Since this allowance is your receipt, you record it on the left side of the cash book, which is the receipt side. Whenever you make a purchase or incur any other expense, it is out of the allowance provided to you. Since these are payments made from your end, they are recorded on the payment side, that is, right side of the cash book. Just as you are maintaining details of your account in a cash book, the bank also records various details related to your account in its books. They include checks issued by you, deposits made by you, service charges, and other miscellaneous transactions related to your account. At the end of each month, a bank statement showing all the transactions related to your account is mailed to you at your registered address. This statement begins with the balance brought forward from the previous month, as well as the closing balance at the end of the month. Now, you tell me, what do you do when you receive the bank statement?
I file it.
What else?
She forgets about it until I remind her for the same.
When you receive a bank statement, you are required to verify these points. First, every entry entered on the receipt side of your cash book has a corresponding entry on the credit side of the bank statement. Next, every entry entered on the payment side of your cash book has a corresponding entry on the debit side of the bank statement. And finally, if there are any charges levied by the bank on the debit side of the bank statement, which you may not have recorded on the payment side, you are supposed to record the same in your cash book after verifying it. This process of confirming the amounts is referred to as reconciling the bank statement, bank statement reconciliation, bank reconciliation, or doing a bank rec. The benefit of reconciling a bank statement is knowing that the balance according to your cash book is consistent with the balance as shown by that of the bank. Remember, the number of checks issued and deposits made in a bank varies from company to company. Reconciling the amount as per the company's cash book and bank's passbook can be time-consuming. The same transaction may appear in a cash book in a particular month and in a passbook in another month.
But I'm not a company. Why should I bother about all these aspects?
True, but the principles are the same. Many a times you may deposit or issue a check which a bank may receive at a much later date. For example, you may make a payment by check on the 29th of September and deduct the amount immediately from your cash book. There is a time lag between the date of issue of a check from your end and the date of deposit of the check by the receiving party. Over and above this, it takes at least a day before it gets cleared by the bank. Thus, the balance from your bank account will reduce in the subsequent month, that is October. Sometimes, the bank may reduce the balance of your bank account or debit your account in banking terminology without informing you beforehand. For example, service charges may be debited from your account in the month of June, but you would notice it only in the first week of July on receipt of the statement. I hope I made myself quite clear with these two examples, the likely reasons for differences in balances of cash book and bank book. It is perhaps likely that neither of the balances is absolutely correct. Adjustments may be required in both cash book as well as bank book to arrive at the correct figure.
I'm still a bit confused.
Aha! The differences between the cash book and the bank passbook is caused by timing differences in recording of transactions, errors while recording the entry, either by you or by the bank.
I think this requires a detailed explanation, Trim.
Factors affecting timing difference. Checks issued by the bank but not yet presented for payment. When checks are issued by the firm to suppliers or creditors of the firm, these are immediately entered on the credit side of the cash book. However, the receiving party may not present the check to the bank for payment immediately. The bank will debit the firm's account only when these checks are actually presented to the bank. Hence, there is a time lag between the issue of a check and its presentation, which may cause the difference between the two balances. Checks deposited in the bank but not yet collected. When a firm receives checks from its customers or debtors, they are immediately recorded in the debit side of the cash book. This increases the bank balance as per the cash book. However, the bank credits the firm's account only when the checks are actually realized. The clearing of checks generally takes a few days, especially in case of outstation checks. This leads to a difference between the balance shown by the cash book and the balance shown by the bank passbook. Direct debits made by the bank on behalf of the customer. Sometimes the bank deducts amounts for various services from the account without the firm's knowledge. The firm comes to know about it only on the arrival of the bank statement. Examples of such deductions include check collection charges, incidental charges, interest on overdraft, check return charges on dishonored checks. As a result, the balance as per the passbook will be less than the balance as per the cash book. Interest and dividends collected by the bank. When the bank collects interest and dividend on behalf of the customer through ECS, Electronic Clearing Statement, the amount is immediately credited to the customer's account. These transactions would be recorded by the firm only on the receipt of the bank statement. Till then, the balances as per the cash book and passbook will differ. Direct payments made by the bank on behalf of the customers. Sometimes, the firm may give standing instructions to the bank to make certain payments at regular intervals. For example, telephone bills, insurance premium, rent, taxes, etc. may be directly debited by the bank on behalf of the customer. This is known as direct debit. As a result, the balance as per the bank passbook would be less than the one shown in the cash book. Checks deposited or bills discounted dishonored. If a check deposited by the firm is dishonored or a bill of exchange drawn by the business firm discounted with the bank dishonors on maturity, in such a case, the amount is debited to the firm's account by the bank along with bank charges for the same. This information is brought to the notice of the firm on receipt of the bank statement. As a result, the balance as per the passbook would be less than the cash book balance. Errors. Errors committed while recording transactions by the firm or by the bank. Omission or incorrect recording of transactions relating to checks issued, checks deposited, incorrect totaling. These may lead to a difference in balance between the two. So, I have given you an overview of the bank reconciliation statement. I hope I have made myself quite clear.
Thank you, Trim. You made it sound so exciting. I'm going to prepare a bank reconciliation statement right away. How's that?
Well done, my child. Thank you, Trim.